Hey guys, so in today's video I wanted to talk to you about this beautiful 1 to 3 risk to reward trade that we took on the New Zealand dollar versus the US dollar just this past week. Now, the other thing that I really wanted to touch on in this video is exactly what is an order block, how do you trade it, because there's a lot of people on YouTube that talk to you about order blocks and they say you should use order blocks to do this and X, Y, and Z, but nobody actually explains what an order block is and how you can actually use it in your day-to-day trading so that your trades become better because you now understand what exactly an order block is. But just touching on that, not only did I take this trade, but everyone in the Discord actually took this trade with me because I sent it out as a signal. And as you can see, we fully closed this for a positive 2.7% on the day. Not only that, but this entire week we've had a solid 5% in total gain on the account from this New Zealand dollar versus the US dollar trade. Then we had an EU sell, and then last night we had this EU sell as well, which we only closed for a 0.5% gain. But as you can see, we've had a absolutely amazing week so far in the VIP group. And if you do want to join, go down in the description. The link is right there. But let's jump straight into the trade analysis. So the first thing that we do is come onto the hourly or a higher time frame. And this is where we are going to identify our areas of interest, whether that be supply or demand zones, order blocks, fair value gaps, because the higher time frame has more merit than the lower time frame. And that's not to say that the lower time frames don't work, because if you're somebody who's a scalper, you can use this exact same strategy in its fractal nature on the lower time frame as you can on the higher time frame. But because we are going for longer term trades, we want to be on the higher time frames, identifying these areas where price can potentially reverse from, and then looking for an entry on the lower time frame. So what I'll do is I'll quickly replay price so that we can get rid of all of these drawings, and that way we can look at price together. So let me remove this and also all of this. Right, so what is an order block? Now, an order block is just an area which price has gone away from and it has broken structure. So in a bullish market, what we're looking for is the last down close candle before the aggressive move out that breaks structure. Now, in a bearish market, it would be the exact opposite. So it would be the last up close candle before an aggressive move down that breaks structure. So an order block is simply an area of price where a multitude of orders were executing, causing price to move away from this area and break structure in an exponential manner. Now, in this area, if you drop down to the lower time frame, what you will see is a bunch of little candles on the 1 minute, and inside of these candles you'll have big executions from the banks and institutions that are now loading up all of their orders in this area before they push price out and break structure. Now, what this means is that because price has now broken structure and away from this consolidation, there is a high chance that price will return to this area, because the banks and institutions will need to close out their orders that are in relative drawdown so that price can then come back to this area. And this is where we look for an entry on the lower time frame so that we can capitalize on the reversal move out. Now, that is the basic theory behind what an order block is. And we simply use order blocks by identifying these areas where price can come back to, so that when price does come back to this area, we can drop down to a lower time frame and look for an entry to capitalize on these moves along with the banks and institutions. Now, that is a very bare bones understanding of what an order block is and how to use it in theory. However, I go into further detail about this inside the VIP group where I break it down further along with all of my trade analysis. So now that we've understood exactly what an order block is, the next thing that we do is we identify where they are. So on this instance, on New Zealand dollar versus the US dollar, this is an area where price has very clearly broken structure to the upside. So if we take a look at market structure as a whole, what we can start to see is that we have this higher high, this higher low, and this higher high formed. Therefore, when this higher low formed right here, when it broke to the upside, giving us this break of structure, we know that this area is a very key level because this is where price decided to break structure from. Therefore, this area holds a lot of orders that are still to be mitigated, which gives us reason to believe that price will not only come back, but it will react from here as well. So now that we've identified our order block, our next step is to understand that when price comes in, we are not simply going to put our entry here and our stop here and just wait for price to do its thing. Because if we do that, that makes us a very low probability trader. And the reason for this is because we are not doing anything to mitigate risk. We want to drop down to a lower time frame where we can get the most optimal entry by waiting for this exact same fractal nature, which is a market structure shift, to happen on the 1 minute, indicating to us that price has gone from bearish to bullish, then looking for an entry so that we have the best setup possible that gives us the best risk to reward and mitigates risk. So now that we understand that we're waiting for price to come back to this area, whilst we wait, what we can also start to identify is that not only is this an area where there was a multitude of orders that caused price to react out and give us this breaker structure, but there is also a fair value gap right here. And because there's a fair value gap, this makes this order block a little bit more high confluence, because now we have inefficiency along with exponential price movement. On top of that, we can also see, if I remove this fair value gap, price came back very close to the area that we have marked out, but it didn't go in there fully, and instead it left liquidity. Now, liquidity along with a fair value gap, along with an order block, makes this area very high confluence, and we know that we can expect some sort of reaction. Therefore, now that we've understood that all of these confluences are in play, what we can now do is start to drop down to the 5 minutes so that we can follow this structure, so that we can identify when a market structure shift happens. So if I play price on, what we will start to see is that price comes down, tags us into the area of interest that we have marked up, which is the demand zone on the hourly. We've taken out all of this liquidity that was resting right there. As you can see, price stopped just above it, created this inducement, and then took out all of the buyers that were trying to get in on this false break of structure. And if I play price on again, what we can slowly start to see is that as price develops, price has now started to break structure to the upside. Because if we take a look at what's happening, we've had this lower low, lower high, this lower low, and now we've broken this lower high right here, giving us this higher high. Therefore, now that we've shifted structure to the upside, we've now solidified that we've gone from a bearish to a bullish market. Therefore, we've now been given the green light in order to take an entry from either another order block or a fair value gap, so that we can take price higher. So now that we've been given this confirmation by looking at this market structure shift right here, what we can now start to do is identify an area where we think price will again reverse from. So the exact same fractal nature that we just witnessed on the hourly happening, we're now dropping down to the 5 minute to again witness this happening also. So what we can start to identify is what area was responsible for breaking structure right here. As we can see, this down close candle before this exponential move out that left this inefficiency is what caused price to break structure to the upside. Therefore, this candle is a very high confluence area where price can return to before giving us a reaction out. So what we would do is we will take our entry right at the open of that candle, and we will put our stops just below this right here. So this low that we've got in the market right there. And what we will do is we will target up here, because this is an area where if we go up to the hourly and the 15 minute, we can see that we have this supply zone right here that also broke structure to the downside, leaving an inefficiency. So we know that we are anticipating some sort of reaction from this area. Therefore, to TP quickly, we would like to capitalize on this small move up. So now if I play price forward, because we've now identified price, we've identified our area of interest, we've waited for price to come in, it's given us the indication that it would like to now go higher. We've taken our entry, we've got everything set, and now we simply just wait and see what price does. So if I play price on, what we can see is that we get tagged in. price moves around, goes up, then it comes back down. Now, this is another key topic that I want to talk to you guys about. When you're in a trade, psychologically, when it comes back down to your entry level, you're going to be in disarray because you're going to have seen price go 2% up. So on a $100,000 account, you're going to see price go $2,000 in profit. Then you're going to see it come back down and go into minus $200-$300. And that psychologically is going to affect you very much more than being in the trade and having it hit your break even, because now you have to deal with being in this trade and seeing your $2,000 floating profit go down to minus $200-$300. So this is where you have to really exercise the patience that we have to have as traders, because you can't let this deter you. You've done all of the hard work. You've understood that price is reacting from this area. So you can't then go and just close the trade because it's come back down, because you've put in all of this hard work to make this trade. You've figured out the story. You've put it all into place. So why get scared and leave it, right? Because you believe that this trade is going to go up, you took an entry. So let it play out. It might take a little bit of time. It might test your patience, but eventually, as we can see on this trade, price will do what you want it to do. Because us as traders, we are the artists. We are figuring out the story that price is trying to tell us, and then we're trying to capitalize on these moves. And as we can see, this was absolutely picture perfect. I know it tested a lot of our patience right here, but as traders, this is what we have to learn to deal with, because if you were to get a 9-to-5 job, you're going to have to deal with customers that are going to test your patience. At least we're not dealing with customers. We're just dealing with pictures, lines, graphs on the screen. So having said all of that, guys, as we can see, we TP'd right here at a 1-to-3 risk to reward, which was beautifully placed, because straight after TP was hit, what we can see is that price then decided to plummet the opposite way. So the TP placement was absolutely perfect. Again, we understood on the higher time frame that this is an area that price can react from, which it very much so did. And if we hadn't TP'd, as you can see, it would have been a stop loss. So we have to not only understand the direction that we are trying to take the trade in, but we also have to understand the other factors that go around these trades, just like understanding where potentially price can stop and how far it can run. So this was again a beautiful 1-to-3 risk to reward trade. This was one of 3 trades that I took this week, which ended up netting us a total of 5% for this entire week. So we had 3% on the NU trade, we had 2% on the EU trade, and we had 0.5% on the EU trade from last night. So again, guys, I hope this gave you some clarity into exactly what order blocks are and how to use them. And if it did, please don't forget to leave a like, comment, and subscribe. And I will see you guys in the next video.